Hello guys, welcome to our channel. This is Daniel from Better Investing Academy. So in this video, we'll be talking about 99SMART's IPO and everything you need to know before you invest. Okay. Now, in this video, as usual, we'll be separate into few segments. First, I'll talk to you about the business. Then we will go through the financials and go through their IPO purpose, how is their growth potential, and we will summarize everything in our view lah. And let me tell you this, pay special attention to the IPO purpose and growth, because this is where I will reveal to you three big reasons, okay, on why I won't buy 99SMART. Okay, after the team research, we found very big three major red flags that I feel you guys should know, because the news and the media has not been telling you guys this information. Okay, so let's get started. And as usual, okay, when we want to invest in IPO companies, first we want to know how they use the IPO proceeds. And are they using our funds efficiently and for the true purpose? And can these kind of companies grow bigger and better? Will the share get more valuable? In short, in the long term, will the share price go up sustainably? And of course, in this video here, if you are just for speculating purposes, or you are a trader using technical analysis, then what my video here may not be suitable for you. Okay, because this video here is specifically for people who are investors, who focuses on fundamentals, and then whether can these kind of companies here help them grow their wealth sustainably over the long term. All right, and we have already set the tone, and let's get started. So let's go through the business. And I think 99SMART, there's nothing much to introduce. I believe every one of you definitely stepped into this store before. It's a chain of mini mart outlets, and currently, they are the largest mini market player in Malaysia already. Yeah, and of course, what do they sell? It's a very simple business. Every one of us know that. They sell daily necessities. FMCG, fast moving consumer goods. Yeah, like food and beverages, personal and baby care, and household products. Yeah, and these are their main revenue contribution. And of course, there are other minor revenue contribution, let's say product display fees. Yeah, and of course, advertising and also promotional fees. Yeah, so this is basically their business. Very, very simple. And their outlets currently, as of this prospectus here, they told us they have 2,651 outlets right now. And they tell us that they have a goal of opening 250 outlets annually. And by end of 2025, they hope to reach 3,000 outlets. Yeah, so these are, their presence in Malaysia. Now, when I go through the prospectus, and when I get through their competitive strength, and this is one I want to highlight to you guys. Competitive strengths, or competitive advantage is something that you have, that other competitors don't have. And it's something that helps you protect your business. Okay, it's something that protects your business and not easily replicated by others. So, I went through a few points, I have to give a few comments. Of course, A is something that I can say is a competitive strength because, you have grown so big, you have take up locations, and, locations, real estate is not easily replicated because, a place is just there already. Once you capture the market, you capture the location, then the advantage is yours, correct? But, to say attractive product pricing, and your nationwide network distribution centers, everyone can do that also. Right? It's not something that's very unique for you. Yeah. And then they also say they've developed a robust business platform. Everyone also can do business platform. Yeah. And then financial performance. See, the number point, consistently delivering resilient financial performance. I mean, isn't that something you should be doing as a management? You should be doing, and giving good financials for the company, right? So I don't think that's even a competitive strength. It's the minimum standard, that you should be doing. And I leave the best one for last one, F. So they said the highly experienced management team with proven track record and industry expertise. They said this is the competitive advantage. I don't think so. Because that means you are saying that other companies, they don't have experienced management team, right? That only you have? I don't think so. Because every companies, they have highly experienced management also. Yeah, so this is not something unique. So I mean, the one that really hold water is only for A. Yeah, because yes, as you grow bigger and bigger, and you gain market share, and that is something, strength is only for you. Yeah, okay, let's move on to the financials right now. So going through here, yeah, not bad. This company is not losing money. It's a profitable business. Yeah. So in 2023, they managed to grow 14%, from last year to 2022. Then in 2022, they managed to grow only 3%. Now, this one, is an outlier. You know why? Because as you all know, in 2021, 2020, that time, it was COVID, market slowly recovering, so we can forgive them, if they this kind of slow growth here. Then 2023, we can see right now, they managed to grow at 14% already. Yeah. And one thing to take note for you guys, okay, if you want to invest in this company, you must accept that their margins are very razor thin. Yeah, even at gross profit margin level, okay, it's 9.5% only. Then after minus all the operating expenses and stuff, yeah, their net profit margin on average is around 4.5%. So it's really, really margin thin business, this one, okay? And in terms of the revenue here, like you said already, it generates through the retail sales of merchandise and household products. And this type of products here contributes 93%. Which means now we know the whole business here, selling this merchandise and these products are the ones that contribute 93%. The other 7%, I already mentioned, like listing fees, advertising and stuff. These are the ones, okay? And why the margins are the gross profit margin is so thin? You can see it's because of this cost of sales here. The cost of sales here is the one that eats up a lot of the margins. Why? Because this is the nature of the business. Okay, because this cost of sales here is actually the purchase cost, okay, from the merchandise and household products that they purchase directly from the suppliers. So in short, it's a simple business. They buy it from the suppliers and then they sell it at a minor profit. Just like that, very simple business. Okay, and that's why their margins are super thin. Okay, now pay attention. This is the main gist of this whole video here, and I will tell you 3 reasons why I won't buy 99SMART. Okay, stop here. Now, number 1, you already read, the media, has been sensationalized, has been hyped up, and then they keep on saying that 99SMART raised 2.36 billion ringgit and saying this is the largest IPO in 7 years. One article also said, that 99SMART plans to leverage 2.26 billion of the public offering raised last week to expand the network. Then having raised 2.36 billion, this is the one I tend to disagree. Because if you go through the IPO and the prospectus, right, I tell you this first, they don't really raise 2.36 billion. Why is that? Okay, this is the one I will tell you guys. Now, if you go through the prospectus here, the IPO, they have 1.428 billion ordinary shares that is been, they want to went for IPO. Now, out of this, there are 2 things you need to take note. There is 2 different types of shares. One is what we call offer for sale or offer shares. And the second one is what we call a public issue or issue shares. Okay, now, so in short, 1.028 billion are offer shares and 400 million are issue shares. Now, just take note, take note of this. There are 2 different kinds of shares when you go to IPO. Now, so in summary, their total shares after IPO for 99SMART is 8.4 billion shares. That's 100% of the total shares. So after IPO, their market cap is around 13.86 billion. So now we know their total shares that has been offered for IPO is 1.428 billion shares. And that is around 17% of the total shares of the company. That means the ones that has been floated out is only 17%. Okay. Then they are, out of this 1.428 billion, there are two types of shares. Offer for sale shares and public issue shares. Now, pay attention. This is the one that I want to educate you guys right now. You see, offer for sale shares are sale of existing shares that are already held by current shareholders or promoters of the company. And take note of this. These proceeds from the sale go directly to the shareholders, not the company. So in the case of this 99SMART, this 1.028 billion here, you see 1.028 billion, this one, the offer shares are being sold through the offer of sale, allowing the current shareholders to cash in some of their holdings. So it tells me that 1.69 billion or 71% of the IPO proceeds has gone to the current shareholders. And the second shares is what we call the public share. Just in case you all want to know what is the public share, is this one. Okay, this public share here. Public issue of 400 million new shares. Okay. Now, public issue is the issuance of new shares by the company itself. And these proceeds are the ones that selling of new shares that will go directly to the company. And this is the one that is raising the capital for the company for business expansion. So in 99SMART's IPO, 400 million of these new shares are being offered as part of the public issue. So How do I derive from this 660 million and 1.69 billion? Because the IPO price is 1 ringgit and 65 cents. So if you 400 million times 1 ringgit 65 cents is 660 million. So in short, 660 million or 29% of the IPO proceeds will only be used by the company for expansion. Now you know this information, and that is why, okay, when news keep on saying that they raised 2.36 billion, and you plan to use this 2.3 or 2.26 billion to expand, it's a little bit, a misrepresentation. It's not really, giving the whole picture. Okay, now that you guys know this, and that is why this is the first reason why I won't buy. Okay, why I won't, buy the stock. Okay, because the proceeds here, a majority, 71% here has gone to the current shareholders. Only 29% of this total proceeds are being used for expansion. Yeah, so it doesn't really bode well, okay, on the purpose, okay, why you want to go for IPO. Okay, so this is the first reason. Now that you can see here further, right, what I said is true, because the use of proceeds is not 2.35 billion as what is stated by the media. Their use of proceeds, if you dig through the IPO prospectus, they already told you, right, is 660 million, which is through the public issue here, 400 million shares. So they only use 660 million. The other 1.69 billion is the sale of the existing shares by the management. And these proceeds has gone, okay, to their pocket already lah. All right. Okay, so this is the one. And reason number 2, pay attention carefully. You know what is this? Right before the IPO, okay, the IPO, in 2024, right? Right before the IPO, for the past 3 years, they have given themselves a total dividends of 1.076 billion ringgit. Yes. Okay. So it seems to me, that they are planning something. Okay, I really can't really say because I can only get this information from the prospectus. That means that, like before you went for IPO, right, before you decided to share, okay, your company to the public, you go and give yourself a lot of the dividends from the company. You take the cash from the company first, okay, and then give yourself dividends. And then you go and raise the IPO, okay, and then you take the 660 million here to replace back this 1 billion here. So it doesn't really give a very positive impression, okay, for shareholders, okay, retail shareholders, okay, on your purposes of going for IPO. So this is the second reason on why I don't like it. Okay, because it seems, okay, all right, that you don't really, okay, want to share, okay, the wealth of the company, okay, to the shareholders. Now, then again, let me clarify further. This is no right or wrong because this is the management of the company. Okay, this is how they want to run the company. The owner, okay, has been struggling, has been working very hard for the company. And I think, okay, it's good, okay, that he decided to reward himself, okay, because of the hard work that he has gone through here. Yeah, the issue is for us, okay, as retail shareholders to decide whether this kind of stock can help us, okay, generate revenue, okay, generate profits and create wealth, and whether the management, okay, their interest is aligned with the shareholder. So for this reason here, the reason number 2 here, I do not comfortable, okay, with how, they went through the IPO, the journey to go to the IPO here and the things that they have done. Okay, now, when you see the payout ratio here, you see, and 2021, you pay 37%, okay, out of your profit after tax. 2022, you paid more than your profit after tax, 132%, and then 123%. So it seems to me that you, before IPO, you are purposely draining out the cash from the company first, okay, put into your pocket. And then only you go to the IPO, raise fresh funds, and then replace back the dividends that has been distributed. This is the one that I'm not really comfortable lah. All right. And then after that, then in your prospectus, you say you will only pay out 50%. But before IPO, you go and pay out 100+% to yourselves. So it's not really good lah. Yeah, in my own personal opinion. Okay. So these are the first 2 reasons lah. Okay. Now, and this is why, okay, I shared it, my views to my community here. And I would like to, I shared a screenshot for you guys. So, in summary, 99SMART raised 2.35 billion. Out of this IPO proceeds, 71% or 1.69 billion go directly to the pockets of your shareholder, okay, of the current shareholders lah. 660 million, this is 0.66 billion, typo here, okay, or 29% of the profits are the ones that really used for company expansion. So my question is this, if they really need this 660 million, why are they giving themselves 1.07 billion worth of dividends for the past 3 years right before the IPO? Yeah, this is the question that is a legit question, right? And you see, in the March 2024, okay, right before the IPO, they even continue to give them the extra 100 million here, which totals up 1.076 billion here. So then again, I already mentioned, the dividend payout ratio is 132, 133, 23 of the profit after tax for the past 2 years. Then after the IPO, they only decided to give 50% payout ratio. So they actually already have enough money. Okay, they could have just used that 1.07 billion in dividends to expand the business. So it means that people go to IPO is because they don't have enough money. I go to the market to raise money so that I can grow the business, But then it seems that this is not something that's aligned, aligned for retail shareholders, So I shall leave it to your conclusion. My role here is to give you all the necessary information, and I shall leave it to you guys, okay, on how you think, okay, about this stock here, Okay, the third reason is actually on the growth. My third reason, okay? Now, you see, it's good, yes. 99 Holdings here, the market share is very big. So in terms of mini market industry, they are independent retailers and chain retailers. 99SMART is under chain retailers, and chain retailers, they hold 75.6% market share. It's a very big market share, very good business. That means you're successful, I know. Yeah. Then market share by revenue, if you talk about grocery based, in grocery base, quite big market share. Okay, individually, okay, they hold 11.6% of the market. Okay, market share. Yeah. So in total, when you talk about the whole mini market as a whole, mini market because including independent retailers here, mini market, they hold 40% market share, and that's very big, very huge. Okay, and their grocery base, I already mentioned 11.6%. Now, in terms of telling you how good you are, how successful you are, yes, you are successful in this point, but it's not really good news for us shareholders. Okay, why? I will tell you later. Okay, so they still say they want to expand new outlets in Malaysia lah. Yeah, they already have 2,000 plus. Okay, and then they aim, to grow 250 outlets every single year. Okay, now why I say this it's not really a good news for us shareholders. Okay, why? You see, I just want to gauge. You say you have 2,600, 2,560, I think so. Yeah, this is the amount of outlets you have. I want to know this amount here, how big are you? How big are you? So 7-Eleven has 2004 outlets. KK Supermart has 861. Family Mart has 370. MyNews has 610. Just in case you all don't know, MyNews is a listed company also. So it shows to tell me that you are really the biggest and you are the largest already. And then, okay, I think of another way. Can you still continue to grow? This is my next question. Okay, can you still continue? Because you see, if let's say the market is always, okay, 7-Eleven is so long already in Malaysia, right? And they hit 2004. And, 99SMART is around 2005, 2006 now. So it shows to me that, okay, is there any further space to continue to grow even more? If the benchmark is around 2004, if you say that your franchise, okay, your stores is around 300 plus or 800 plus, then you can give me some idea. I can still continue to grow even more. It grow even more. So I make a schedule already here. When you want to invest in a stock, the only way you make money is through share price increase. And share price increase is when the company grow bigger. So it's up to you guys to see whether you want to invest in this company here. Because you see, the current stocks they announced to us is they have 2,651. Okay, I make it zero, I make it nicer only. Okay. And then they plan to grow 250 per stock. We already mentioned that, right? So by 2025, okay, if you will hit 2009, you hit 2009, okay? So when you hit 2009, okay, it means that your growth rate is what? 8.62%. Then as you grow 250, 250, 250 lah, okay, because your total stocks is 3,000. Sorry, let me repeat, just in case you all do not understand. By 2025, they will have hit 3,150 stocks compared to last year 2,900. So it grew by 8.62%. But in your prospectus, you told me every single year you will grow 250 stores. Good to hear. But in terms of the growth rate, may not be that attractive because as the years goes by, you have more stores. More stores, you would have more money, more cash. You should have already grown even faster and opened even faster. So if you, let's say you continue at 250 every single year, right? You have only grown at 7.94%, 7.35, 6.85, 6.41, 6%. So it also can tells me that your revenue should be around this growth rate only. So my question to you guys is, do you want to invest in a company that the revenue can grow only within these single digits, 7, 6, percent? Revenue also grow the same thing, which means the share price also will grow at 7, 6% per year. Unless, of course, it may go up higher, but that's because of market sentiment, or even hype. We discount that. Let's focus on the growth, the real price increase based on fundamentals. Do you accept it? So based on this, for this reason, the third and final reason is also why I don't find this 99SMART stock very particularly attractive for me, and I won't buy it. Okay, now again, you will see news that yeah, but Daniel, you see, there's plan that 99SMART want to expand internationally. They want to focus on Southeast Asia. Again, based on my experience, don't invest based on promises. Execution is another, is another thing. Okay, they can currently promise you the sky and the earth, heaven, right? But at the end of the day, what we want is to see the execution. Okay, you go to another international, it's another different gameplay already. So we don't want to invest based on promises. Yeah. So let's end this video, okay, with our view, okay, and give you guys a summary lah. So again, 99SMART here claim to have a large and wide margin market share. Good, but I think that it's backfired because you are also telling me that there's hardly room left to show high growth in Malaysia. And rapid expansion, you see, when we grow, wow, you are growing more and more, a good business get bigger. But you need to think of this, because oversaturation can happen. Because land space and population is limited. Do you agree with me? So these excessive outlet openings, in my view, it may lead to diminished same-store sales growth, or SSSG, because these new locations may start to cannibalize or may reduce sales at existing ones. Do you understand? Because if you open nearer to each other, then it's diluted already. The same population, instead of all focusing on the another one, now they have two choices already, for example. So can you maintain the same sales and the same margin? Then not only that, they may even open nearer to the competitors, which may potentially reduce sales at the new stores. So my view, okay, tentatively based on the information they give us, with the razor thin net profit margin of around 4.5%, I already calculated for you guys with existing stores right now. It's uncertain whether they can maintain this low margin if they open more and more stores. Okay, now, then I feel that, the management has made themselves wealthy already, okay, by collecting 1.07 billion of dividends before the IPO and selling 1.69 billion of their shares during IPO. Now, there's no right or wrong, okay, on the actions on they did. It's their company. They can decide what they want to do. Now the issue is for us as retail shareholders, okay, whether we can decide whether we want to buy, okay, or not to buy this company. So retail shareholders, you must understand the only way you can profit and create wealth is through the increase in share price. Do you agree with me? And share price will only increase if the company gets bigger, whether it's revenue or net profit. So it's our view that 99SMART went IPO at the peak of their business already. This is our view. Because I feel that you open up until 2,000 plus outlets already and compared with other people, it seems that you are already at the peak because there's Malaysia population is just that much only, and there are certain locations, okay, at saturated with people. So this is our view that when IPO at the peak, it's not during the growth phase, high growth phase already. So you have to think logically. For 99SMART here to double their $1, 1 ringgit and 65 cents price, they need to grow twice the size of their current business. Correct? So this means growing from 2,651 stores to 5,302 stores. Right? Logically speaking. So my question to you guys is, you must start thinking like this. First, can they achieve this? Number two, how long will it take? Then number three, will the market be start to be too saturated already? Again, you may say, yeah, they can start open internationally, but that's a different gameplay. It's quite uncertain. It's a different regulation, different population. There's a lot of things. Can they really execute? A lot of uncertain things still, right? And then, will these future stocks maintain the same amount of sales and profit margin? This is the one that worries me. Okay, so again, these are, in total, these are the 3 reasons, okay, why I won't buy 99SMART, okay, to grow my wealth. And, these are everything that I find for you guys. So I hope you guys enjoy this video here. And of course, okay, if you have friends or families, we keep on asking you guys whether can they buy 99SMART or not, is it good or not, you can share this video to them, okay? And like always, if you enjoy this kind of content, do subscribe and we will continue to post more and more such videos for you guys and educate you guys, okay? Again, thanks for watching.